The S&P 500 just closed out the first half of 2023 with a gain of nearly 16%. The bulls believe the momentum will carry stocks even higher into the second half of the year, and the bears believe that we're in for a deep sell-off. So let's review the bullish and bearish narratives, and also go over seasonality with the stock market and what it could mean about which way the stocks might go in the coming weeks and months. The bulls believe that the momentum that we saw in the first half could take us through the second half. And if the earnings do not come down like the bears expect, it might mean that we'd see as good a second half as we saw in the first half. The bearish narrative is that the S&P 500 is extremely overvalued right now. In fact, it's trading at a multiple of 19 to 20, depending on how you calculate it. And during a good market with good economic conditions, 18 is considered a little bit on the high end of a fairly valued market. Combine that with the fact that the Fed has raised interest rates 500 basis points faster than they ever have in the history of raising interest rates, and that they're planning on doing 50 more basis points, and you've got the potential for some unknown unknowns coming in the coming months. Bitcoin continued to consolidate this week after its pretty significant rally last week. And as you can see, it's still finding support around this parallel channel that we created several weeks ago. What I like to do when it comes to circumstances like this is bounce off the other parallel channel that we're using. So what I'll do is I'll draw a new parallel channel starting around the levels of support and resistance that we see from this one, and then move up to where we see resistance in the new one. It's important to remember that there are no guarantees when it comes to technical analysis. It's just an arbitrary way of me giving myself price targets, so I can know where I want to add to a position when it sells off, or where I might want to take profits if it keeps rallying. You can see that we saw a bit of a significant pullback here on Friday, but Bitcoin did find support, and the buyers came in once the price dropped under $30,000 and bought it back up. However, you can also see that new parallel channel I just drew is providing a whole bunch of resistance here, and we're at a very key pivot point. Bitcoin could go either way. When it comes to circumstances like this, particularly with crypto, I've noticed that Bitcoin can either rally higher or crash lower, and it's really hard to predict which way it might go. I will be adding to my Bitcoin position if it even gets close to testing the low from Friday. But again, I buy in small quantities. The further Bitcoin sells off, the bigger the quantity I'll buy. And you can see we do have support down here now, around the $28,100 mark. After that, I would use the open of this day as a level of support that we might pull back to. It's down here at $26,334.41. However, if I wanted to be more aggressive in my buying, I would do the technique that I did last week, draw from the low to the high of the move, and use this 50% retracement right around $28,086 as one of my key buys. In fact, you could also use the other Fibonacci retracement levels as buying points, here at 27,300, and you can see that this 78.6% retracement is very close to this support line here. Even though I would probably go with the higher price because I like to be a little bit more aggressive when I'm adding to my positions. Rivian was the winner in my portfolio this week on the back of analyst reports that showed that it might not be as bad as everybody thought. It might sound strange, but a stock can pop when a company's news goes from being terrible to just bad. And that's what happened this week for Rivian when it popped 23.32%. and ended up being the week's winner. Canopy Growth Corporation can't stop screwing up. At this point, I think they're actually trying hard to just keep making mistakes. This week, Canopy's accounting firm resigned, and they decided to put out an equity distribution because they needed more money. What happens is they sell shares, and that dilutes the value of the shares that already exist on the market. As a result, Canopy Growth dropped another 25.01% this week alone, and is now the biggest loser for 2 weeks running. And I don't see this one stopping before it declares bankruptcy. Carnival Cruise Lines was the biggest winner this week, and here's a surprising statistic for you. You might know that Nvidia and Meta were the number 1 and 2 biggest gainers for the year so far, but Carnival Cruise Lines is the third. On the back of positive booking numbers and the fact that the market is getting behind the new CEO, Carnival Cruise Lines rallied another 19.18% this week, and analysts believe there's further upside. In fact, one firm came out and said Carnival's no longer a trade. It is now a long-term investment based on the changes in the cruise line space and the way that management is handling finances at Carnival. My penny stock Golden Minerals is once again the biggest loser this week. This time on the back of an equity distribution they did in order to create more financing. They had to sell shares so that they could increase their bank coffers so that they would have investment in the future. But when you sell shares, you dilute dilute the value of the shares of the existing shareholders. And that's what happened this week. Golden Minerals dropped another 12.43% and was this week's loser in the speculation in play portfolio. Apple made a series of new all-time highs this week, and on Friday it crossed an historic milestone. It is now the biggest company with a market cap of more than $3 trillion. Even though Nvidia is the high flyer and biggest position in my portfolio, Apple finally outgrew its target allocation size by such a large amount I had to take profits. I made a sale on Friday that went through at $191.65. This locked in 304.07% in gains on shares that I bought for $47.43 back on November 14th of 2018. It also lowered my per share cost 13.09% down to negative $77.58. A negative per share cost means I've taken all the capital out of the position, and each share adds $77.58 to my portfolio's bottom line. As much as I believe in Apple in the long term, it's not bearish that I trim this position. It's just gotten too big, and my investing discipline dictates that it's time to take profits when that happens. From here, my next buy target is $139.21, a point of support Apple has seen several times in the past. And my next sell target is at $213.75, a price I calculated using the Fibonacci method, and a point at which Apple will have significantly outgrown the allocation size for this portfolio and need to be trimmed again. Waste management really popped this week on the back of the industrials rally. Whenever construction rallies, so does waste management. And the reason for this is that construction creates a lot of trash, and that's waste management's business. The stock has seen a lot of resistance at this price level before, so I decided it was time to trim it a little, especially since I feel like the market's getting a little frothy. Whenever I'm feeling like things are overvalued, I never close my entire position, I just trim it. That way I can reduce my cost basis, free up some capital, and if we do see a sell-off, add back into the position at lower levels. My sale went through on Friday at $170.91 and locked in 15.13% gains on shares that I bought for $148.45 back on October 1st of 2021. The sale also reduced my per share cost 22.24%. down to $75.30. From here, my next buy target is $149.43, a point of support that Waste Management has seen several times this year alone. And my next sell target is at $199.90, just a little under that $200 psychological price point that creates a lot of resistance every time any stock hits it. To learn more about long-term investing and to follow along in all the moves in all of my positions, check out my website getirked.com, which is always 100% free. Please hit like and subscribe. It really does help the channel out. Thank you for watching, and I'll see you in the next video.